But just to begin, so, like you said in your commentary as well at the press conference, the loss of momentum because of two bankruptcy clients, but is that the only factor that's dragging down Q1 for you, or are there other legacy issues? Because you also spoke about how HPS has been a recurring issue, and will you be able to recoup these factors, starting Q2, Q3, Q4, Q3, Q4 are traditionally weak quarters from a seasonal point of view. Just take us through what the rest of the year looks like for Wipro.
So Chandra, first of all, thank you for having us on this program. You're right, I'm slightly disappointed with the loss of momentum in Q1, primarily driven by the bankruptcies of two customers. One happened in the first week of the previous quarter and one in the last week, both of them having about a $50 million annualized run rate impact in Q1, which is difficult to recoup. And other than that, it is contributed to the HPS customer exits, which have happened. Just to give a sense, the HPS numbers were about 5 quarters back or so, $70 million quarterly, which is now in the low 30s for this quarter. So that has been a significant impact for us, which we have baked into our guidance in Q1. And India and Middle East, as I've always said, is undergoing restructuring. Well, we've taken all the actions that we need to take in terms of change of leadership, change of strategy, a primary shift in terms of the kind of business that we are doing over there, moving into the digital consulting kind of business from some of the infrastructure business that, as Wipro Infotech, that we were doing. But the change is taking a little longer than I would have expected. So those are the 2 or 3 major reasons of seeing the slower growth. But for India, Middle East, we've baked into our overall numbers. So, while we'll have softness in 1 or 2 verticals here or there always, but the overall momentum is good. Just if you look at Q4, for example, 2 of our verticals, banking and financial services and manufacturing and technology, have grown 3% quarter on quarter.
Right. You also mentioned during the press conference that, you expect this year to be better than the previous year, but you also said that, your ambition to grow in line with industry may get pushed out a bit as a result of this loss of momentum and, starting the year on a weak note. When you say pushed out a bit, fair to assume that it will now be the next financial year, or?
So, we will resume our growth trajectory from Q2 onwards. But as you would imagine, if we start a little weaker in the financial year, it will take us a little longer. And I've always said that you need to look at industry matching growth in 2 different frameworks. One is on a Q-on-Q basis and then a year-on-year basis, because there is also a run rate effect which comes in. So you need about 4 quarters of industry matching growth before you come to year-on-year industry matching.
Right. One more thing that I wanted to get from you, Abid, is in recent weeks, if we look at the management commentary from TCS Infosys, they are talking about how the nature of digital spend has evolved. It's no longer happening at the periphery, but at the core, therefore leading to a lot of opportunities for IT companies. Are you seeing that play out in terms of the size of the deals, the size of the projects that you are executing for companies?
Absolutely. As I mentioned earlier, our digital order book has been the highest ever. We are seeing increase in deal sizes for a large number of our enterprise customers. We are their digital partners now, so we work very strategically with them. While we continue to do some proof of concepts and smaller pilots with new customers, a lot of our key large customers, growth is being driven by our digital offerings over there. So a lot of transformation is happening from the existing legacy portfolio into digital, and we are seeing larger deals and larger strategic partnerships with them.
Right. Jatin, margins have been a worry, not just for this quarter, but the last few quarters. I know you don't give a margin band, so to speak, for Wipro, but do you expect FY19 to become better, and what levers can you really use?
So if you see our building blocks, utilization is very good. If you see our offshoring, its offshoring is very good. We have had probably best automation story. What is impacting us is the volatility and external noise. Volatility of India and Middle East business, reduction in revenue in our health plan business, where you have to cut cost in line with your revenue to be able to remain profitable. So we believe the core business is healthy and it can generate good profitability. Q1, and therefore we think that during the course of the year we will improve margin as we go. But
so will you come back to sort of near 18, 19, 20?
With the moving parts that we are in with, I would rather execute every quarter and work through every quarter than guide a range. And therefore for Q1 we'll have to work through the headwinds on revenue and MSI.
But we won't see a 14, 15 sort of range happening again.
No, I wish I could.
Because that is the historic
Yeah, certainly. No, when I say we want to improve margin, I'm giving you a directional sense where we want to be. We are not giving you a range for the year or range for the quarter, but directionally, certainly we want to be in a better place than where we are.
But are you confident of getting back to at least last year's levels? I think you ended the year at what, 16.5%?
So we did 16.8% if you take one-timers off. And I think our business can deliver certainly a good margin.
So you're confident of coming back to that
Yeah,
level?
if you see our last few years' margins, they are good reflection of where we can be. And we need to work through the element of noise, as I say, to the operating margin through the quarters, and we can get back to the trajectory that we have always delivered in. That is the inherent potential of business to deliver those mindsets. But we have to work through these periods as we go through.
Right, right. Banu, coming to, a lot is being said about India and Middle East, the stress there. Is the worst of that over? Should we anticipate some overhang in the coming quarter or two? And also, vertical-wise communication has sort of, seemed like a laggard when I compare it to your other strategic business units. All of them, double digits, communication still in the single digit. Telecom has traditionally been a strong vertical for Wipro. So what's happening there? If you can give us some color on India and Middle East as well as the communications part.
So on the India and Middle East business, right, we described to you the strategy that we are following for relooking at that business. That strategy is in motion right now. That transformation for India Middle East is in motion right now. We're able to bring in a lot more global practices into those businesses. We're able to bring in a lot more execution discipline into that businesses, and also a lot more discipline in terms of the way we construct the deals as well. So while there is volatility because the transformation is in progress right now, we do believe that all the things that we're doing well for that business will augur well for that, India Middle East business right now. Coming to the communications business, the business itself, if you look at globally, the business is under a lot of transformation for our customers. And Q4 specifically is a question of specific customer projects getting over. But at an overall level, we do believe that there is a transformation in progress right now for that business as well. We are building our capabilities and competencies required for managing that business. There's a new leadership change for that business as well right now. So I think we will transform that business as well going forward.
Okay, and even in the retail space, a lot of clients are undertaking transformation exercise because of digital. So is that a big opportunity as well?
So retailers had a stressful business for some time, right? Because of all the different pressures that they had in their businesses as well. But we do see a significant opportunity for digital in the retail business, right? Digital in terms of the consumer experience, digital in terms of insights and services, digital in terms of marketing capabilities for the retailers. So we do see a good momentum in that retail business right now for our consumer business right now.
Right. Sort of coming to you, what levers can you really help Jatin with when it comes to improving margins? We've seen a lot of companies, you going to utilization again and again, the offshore-onshore mix, but what levers can we expect from the HR side?
As Jatin, utilization is a 13-quarter high.
And is there still upside?
Absolutely. There's headspace to go further. So we will work on that. That's a big lever for us. But I must tell you, we'll have to look at in two parts. One is, whilst, as you see, the margin overall is stress, very clearly, as per the 6 strategic themes laid out by Abid, investments will continue to be made in those so that we look at the long term. So we'll have to strike a balance between the investments required as well as on the near term in terms of looking at the margins. So both have to happen. And here I see things in terms of driving productivity, driving offshoring, improving utilization, making sure we do the right hiring, all and non-linear growth. These were all the levers which we have to improve our margins, and we'll continue to work on it.
And what sort of salary increments can we expect?
So again, that's another area of investment, critical to make sure that we ring fence and pay our high potential and right talented and key skilled people correctly, and we will do that in line with the industry. It will be effective 1st June. We have not called out the exact numbers yet, which we'll share with you. But very clearly, we will pay comparative to the right people who in the right areas.
Finally, Saurabh, there was a report even today about how the approvals for H1B have come down by 50% in the last 2 years. I know Wipro is very big on localization and, over 50%. But has this had an impact? I mean, I'm sure your dependence hasn't gone down to zero when it comes to H1B. So are you seeing that happening? So the approval rates coming down dramatically?
Two things. One is, as you said, we are very clearly driving a long-term strategy, not only from now on localization. If I look at US, very clearly we are leading the way. 57% of our population is localized there. Whilst we are not to an extreme of a zero from an H1B, we are making sure we have the right inventory of the right skill sets which are there, which we have applied for. But that's minimal for us. That's what is required from a business standpoint. And it is not something which is a breaker from a growth point of view for us. So we have made enough investments across to make sure that that does not impact us, even if the approval levels come down below 50.
Right. On that note, thank you so much for joining us on ET.
Thank you.
Thank you.